Talk about the federal budget just a few days away and an election to be called soon after. What should we expect? What needs to be delivered? Let's get straight to it now with Pradeep Phillip. He's the head of Deloitte Access Economics. Pradeep, thanks for your time this afternoon. This is a difficult budget in many respects, like many that we see. We would say, tough environment, but high cost of living right now, high inflationary environment, pre-election environment. What needs to be delivered to get the balance right?
Great to be with you, Kieran. Three things, actually, that the government will be looking at to frame this budget. What's the global environment look like? And we can see Russia and Ukraine playing out. We see volatility and uncertainty in markets. Second, what's the economic environment? Now, we spent 2 years of using the budget as it should have been used to prop up the economy, to invest in health, because investing in health was actually investing in our economy during the pandemic. But now we need a period of a bit more consolidation, thinking about how do we ensure that our deficits don't continue to rise? And secondly, how do we get a better bang for our buck to grow the economy? And the third thing is, how do we look after people? And yes, there are cost of living pressures around at the moment, but the question for the government should be, is this temporary or is it permanent as they think about what they should do about it?
Is that the key here to getting that balance right between helping people on the one hand, but not baking in the spending?
Absolutely.
Is that the key?
Absolutely, because the talk now about inflation and inflationary pressures and cost of living are generally being driven by the images that we and our experiences at the petrol bowser. Petrol's gone up. Why has it gone up? It's gone up primarily because of a supply constraint, because of Russia, Ukraine. So is that temporary? That'll be the question, because what we don't want to do is bake in more spending in the economy for an economy that's actually growing, which might then push up inflation even more and elicit a faster and stronger response from the Reserve Bank on interest rates.
Would you be comfortable with, say, a move on the fuel excise if it was temporary, like we've seen recently in New Zealand?
Look, we don't think that's actually a good thing to do, because if it's temporary, playing with the fuel excise can have the effect of baking it in. And we don't want to do that. The second is, the fuel excise is there for a particular reason. In part, it's there to tax a public bad. And so cutting it would be increasing the incentive to consume more of it. And that's not a good thing. And the third reason is fuel excise is used to pay for roads and things like that. So we don't want to cut the revenue mechanism that allows us to spend on those long-term infrastructure needs of the country.
There's been a lot of focus about security. You touched on that as well with Ukraine, but also obviously with China the last few years, a lot of discussion about its aggression and assertiveness in our region. But you've written a recent paper that talks about our huge dependence on China. We know about it in sort of broad terms, but specifically, this is a security question, isn't it?
Absolutely. So, our relationship with China has been growing for years, and it's been really good for the Australian economy, built by business-to-business interactions, driving growth in our economy. And China is our largest export market, really important for lots of sectors. In fact, in terms of the size of China for the Australian economy, it's a bit bigger than retail. So
the whole retail sector is smaller than our deals with China.
Absolutely. So it's a really big deal. And so we now find ourselves at a really interesting point. China has started exerting itself economically and in terms of geopolitics. And we have to have a position. And there are some things we do absolutely need to stand up to China on. But we need a bit of a nuanced approach, because our economy, our business community is well enmeshed with the Chinese economy and with Chinese businesses. And so any pivot needs to take place carefully, because we've often thought, Kieran, for a long time, that we have a debate about security on its own, about technology on its own, and the economy on its own. But now we're seeing how they're being linked together. There's a triangulation of these things. So we can't talk about security without thinking about the economy. We can't talk about the economy without thinking about technology.
And one of those technology points that you've looked at closely is this idea of Earth observation, which sounds, a bit airy-fairy, but it's actually worth a lot of money to our economy and potentially a growth industry.
Absolutely. You know, Kieran, space is a great opportunity for the Australian economy, for businesses and for jobs. And one of the key elements is the use of satellites and the Earth observations that come from that, because that goes into lots of different sectors like agriculture, etc. Now, Earth observations generates about $2.5 billion for the Australian economy. The problem we have at the moment is that we rely so much of this data on foreign satellites and privately owned satellites overseas, and that can be a risk if, for instance, there was a denial of service hit to the Australian economy.
Yep, hits key services, doesn't it? Pradeep, Phillip, I appreciate your insights. We'll see you next week for the budget.